Hi there, everybody. This is Craig at Max Trading, and it is a pleasure to welcome you to our live trading session today. Thank you for being here right on time, and we're looking for today's U.S. jobs news to provide some nice price action for us. We hope that will be the case. We'd like the opportunity to show you how Max Trading methods take advantage of the movements in the marketplace. And equally importantly, maybe even more importantly, how our risk management protects the account balance, allowing it a chance to grow as you trade. Please remember that this is not a trading room. We are not providing trade calls. Nothing you see or hear in this webinar can be taken as entry or exit recommendations. Everything is for educational purposes only. Eusebio is here to lead us to the charts today for this NFP session. For those of you who may not have met Eusebio yet, you are about to discover that he is a very highly skilled trader. And I believe you will sense that he really enjoys helping fellow traders. So please listen, watch carefully. Feel free to ask questions in the question panel on your GoToWebinar window. The methods that you see today are taught in the Max courses, which begin this month. We provide very nice discounts for those who take the time to participate in our webinars, and I'll post those links a little later for you. The weather is a bit stormy today for this broadcast. Unfortunately, there is the possibility of internet interruptions. We are hoping for the best, but I know you'll understand if we have to shut down unexpectedly. And if that does happen, if you would, please allow us several minutes to get back online. And if that can't happen within 15 minutes, then we'll consider this session canceled, and we'll reschedule for you. We'll provide another free live trading session for you at a later date, but hopefully we won't have to do that. Eusebio, I think that's all the preliminaries. Thank you so much for sharing your time with us today, and I'll pass the microphone along to you.
Yes, thank you very much, Craig. Hello, everyone. Welcome to this live session for the non-farm payroll. First of all, let's make quickly an audio and a video check. Do you see my charts, my screen, and do you hear me well? I see that on our private Max chat room, I got already answers. Okay, lot of answers in the question area. If you have any questions, please feel free to write them, to put them into the question area, and from time to time I will have a look to it and I will try to answer. So we are waiting for the non-farm payroll. You know that the non-farm payroll is a news which is not easy to analyze for several reasons. First of all, it is the first major economical data in USA at the beginning of each month, and so it's difficult for the Labor Department to have definitive results. And so the number which is given is always a temporary data, and this data may be revised several times. And by the way, 2 minutes after the non-farm payroll release, we have the revision of the previous months. Now, in order to have good movement with the non-farm payroll, it's not enough to have a good number. The forecast is 181,000. A positive or a negative number is not enough to create a trend in the market. We need to have a deviation big enough. We need to have what we call a big surprise. And it may be a deviation of 40, 50 K or 1,000 in the number of jobs. It is even more complex because this data is also combined, at least for the market analysis by the big boys, with the unemployment rate. They like to see, in order to take position in the market or to readjust their positions in the market, they like to see the non-farm payroll and the unemployment rate online. So we just hold on one second. Okay, I apologize. The storm problem Craig has mentioned is on my side, and this has also an effect on my throat, so I make some allergy to pollen and to ozone. Anyway, so I was explaining that the big boys analyze the combination of the non-farm payroll and the unemployment rate, and they like to see, for example, when we have a big positive surprise price, the non-farm payroll, to have also a decrease in the unemployment rate. If we have opposing data or contradictory data, for example, a good number in the non-farm payroll but a bad number in the unemployment rate, this is something which is much more difficult to analyze for the big boys and for them to take a decision. And sometimes when they take a decision, we have to wait a lot of time. So this means that as soon as the non-farm payroll is released, we will have to analyze the two numbers, and anyway we will have also to wait 2 minutes later for the release of the revision of the previous months. You are lucky, Jan, if you have sunshine in Switzerland. And the storm has started, in fact, approximately half an hour ago. And I have had already an alert with the power supply. Fortunately, I have a UPS giving me around 39 minutes of autonomy. And so this helped me to shut down everything properly until the power will come. But let's hope that we will not have a problem. So otherwise, as Craig has explained, we will schedule another session. Very important, we have approximately 9 minutes, 8 minutes and a half before the news release. A very important aspect of the max is the following. Let's suppose that before the news release, you see on my chart here, I have taken the pound Aussie, which is one of my preferred pair to trade because it is one of the most volatile pair. And in the context of the Brexit, now we have a lot of volatility on the pound, with each major event happening in UK. And so we see sometimes the pound strengthening, sometimes weakening, but giving nice trends. Anyway, on this chart you have, of course, the price itself, our indicators, and you have vertical lines. The yellow line represent open and close of major market. We have the Frankfurt Open, the London Open, the US Open, the Wall Street Open, the Frankfurt and the London close here. But there is also a red vertical line which represent major news releases. News releases which can create volatility in the market in the case of a surprise. These news releases, of course, are taken from the calendar. But not all the news are important. Even a red news is not necessarily an important news because unfortunately the color code used by Forex Factory in particular, but this is true for other economical calendar, is not always correct. The analysis of the news release and their importance is way more complex than the usual way they are used. A red news or an orange news is not necessarily always important. There are news which are always important. The non-farm payroll is always important. And when we have a big deviation on this news, so a big difference between the forecast and the release data, we may have possibly nice movement in the market. But some other news are only important at a certain moment in the economical cycle of the corresponding country. And some of the news have no importance at all. A typical news which usually is not important is one of the news we have had this week, yesterday, in fact, the ISM, manufacturing PMI. It is extremely rare this type of news release has importance. Sometimes it has when the big boys have no other news to analyze, or when there are specific events or situations in USA, but this is not frequent, and so personally I ignore that type of news release. But today we have in a few minutes now the non-farm payroll, and one of the important rule we have with the max is, so the non-farm payroll and all the other news at the same time are represented by this red vertical line, is if we are in a trade and we are approaching the news release, for example here on the pound Aussie, there was a nice short setup on this candle, giving a trade which went nicely, by the way, and at some point along this trade we had an opportunity to scale out, so to close half of the trade. Whenever we open a trade, we consider the trade is made of 2 units, and when we scale out, when we make an MX, a minor exit, we close 1 unit, leaving 1 open unit if the trends resume. But if we are facing the news release, half an hour before the news release, we close the all the open trade. And so in this case, it has been a decent trade. And so we wait for the news release to be made, and then depending on what will happen for the news release, we will have to take a decision. If we have a big surprise, let's consider the pound US dollar. If we consider the pound US dollar here, and we have a big positive deviation with an unemployment rate confirming the good data, what we should see normally is the US dollar strengthening. And so the movement this will create will have 3 steps. In general, 3 steps. Not always. Sometimes there is a fourth one, or a pre-step, in fact. The 3 usual steps are the following. The first step is a fast spike in the direction of the news. And so a fast spike to the downside if we have a positive news. If we have a negative news, of course, the spike will be to the upside. But let's suppose it will be positive, as the ADP non-farm payroll has been 2 days ago. And then the second step will be a retracement, and the third one will be the fundamental movement resuming after the retracement. And sometimes I have said that we have a pre-step. The pre-step is the market will anticipate what the news will be. When I say the market, it's the big boys. And so the non-farm payroll is one of the most difficult news to forecast, even by the big boys. And so I don't think they anticipate something, except if they use the ADP non-farm payroll, which is not so reliable news. And so we can see that since today, the beginning of the day, the pound US dollar went downward, so the trend was downward with some volatility, of course. This means either the pound weakening or the US dollar strengthening, or both. If we observe other US dollar pair, like the Euro US dollar, we can see that the Euro US dollar is without bias, so no bias. If we observe the USD yen, we can see that the US dollar was weak here, or the yen was strong. So it's difficult to say that the US dollar was strong today. It may be strong, it may be weak. So for me, no anticipation by the market. So we have to wait for the news release. At the same time, we have also the trade balance, which can also influence the market, even if it is news in orange. It is a very important one, mainly if we have also a big deviation from the forecast. And at the same time, we have similar news with the trade balance and the labor productivity quarter over quarter on the CAD. And so this means that currencies like the CAD, the US dollar, but also the pound, we have had the news this morning with the pound. The yen, which has a negative bias, my bias are negative for the pound, positive for the US dollar, negative for the yen, negative for the CAD. So, but this can change with the news release. So, but this helps to have some bias to consider before the news. Now that we are approaching the news release, these bias have no longer meaning. So now we have to wait patiently for the news to be released. And so I will update the calendar. It will be normally in 1 minute now. Yes, we have the small green dot here. So let's wait and see. And I will focus more specifically on this number, the number here, for the non-farm payroll and the unemployment rate, but also with the trade balance in the CAD. The trade balance has not a lot of surprises. The surprises are not frequent. This is why many ignore that news, and in some countries it is not in a red color. But for me it is an important one. It is one of the major fundamental factors driving the market, but the big surprises are not so frequent. So in a few seconds we will have the news. And if we have not a big surprise, so the movement we are seeing on the charts most probably will continue after the news release. So we have the news being released now, so we will wait for the numbers to be updated on the chart, but we can see that the pound US dollar is spiking upward, the euro US dollar is spiking upward. So does this mean that we have the US dollar yen is spiking down? So does this mean that we have a bad number or less good than expected? Indeed, we have a bad number. So we have a deviation big enough, but at the same time, we have a better number in the unemployment rate. And so we have contradictory news here with the employment market, and we have a small negative number with the trade balance. So it's difficult to define what kind of impact this will have in the market. We have a negative one, we have two negative number and one positive number. But I think that with the expectation the market had, the expectation was for a good market, this is very negative. So we have a big negative deviation. So I'm expecting the US dollar continuing to weaken. And so now we are seeing the first step, so the spike in the direction of US dollar weakening. So upward for the euro US dollar, upward for the pound US dollar, downward for the US dollar yen. And so let's wait now for the second step with the retracement. And we have to wait now 10 seconds for the revision. The Forex Factory calendar does not release or does not publish the revision. Some other calendars do that, but because my rule is to wait minimum 5 minutes after the new release, these 5 minutes contains the time schedule when we have the revision for the non-farm payroll for the previous months. Incidentally, for the trade balance in Canada, we have a small negative number, so not a big deviation, and a bad number for the labor productivity. So the CAD should most probably weaken somewhat. So we have some difficult situations so today. Contradictory situations in the US dollar, but my guess is the most plausible movement, fundamental movement would be for a continuation of the US dollar weakening and the CAD weakening too. You can see that, for example, for the CAD yen, we have a spike to the downside. I have also the USD CAD, which would not be very interesting to consider because we have the two currencies weakening, so the impact should be less when the volatility will slow down. You see the spike is only 34 pips, so not a big deal. So I will not consider the USD CAD. So we have a lot of possibilities to consider after the volatility will slow down. Interesting to note that the pound Aussie has just paused on this price level. Many of you know that every weekend I analyze around 18 to 20 charts pairs, and I define several price levels. I don't call them support and resistance level, I call them supply and demand level, and you can see that except for the spike, the fast spike here, the price was pausing in fact on that level before bouncing off. This trade I have marked on the chart has appeared, the setup has appeared just after the price has crossed down this level, which was then a supply level. And this level here was a demand level. So the news has been released now for almost 5 minutes. Sometimes we will have to wait a lot. I remember 1 year, but it was a difficult year. It was in 2008 after the subprime crisis, or in 2009, a few weeks after the subprime crisis, in a circumstance of the non-farm payroll, a difficult number to analyze in combination with the unemployment rate. The market has waited 4 hours before deciding which direction to take. So my bias for the US dollar is a continuation of the weakening of the US dollar, but the retracement doesn't come. And with the max, we never ever open a trade after a long bar. This is a very long bar. The length of this long bar is around here. Let me move somewhat this red line here just to better see. So it has started here up to there. So it's 57 pips, which for the US dollar yen is a big size. But similarly on the CAD yen, and similarly on the pound US dollar, so the spike has been here around almost 40 pips. Yeah, Gibson, that these big spikes upward for the pairs having the US dollar as the quoted currency, or to the downside for the pairs having the US dollar as the base currency, or the other cross not containing the yen but being influenced by the, not containing the US dollar but being influenced by the US dollar, of course, are not tradable. We have to wait for a pullback, and then we can consider trading the movement after the pullback. We are still in the first step, as I have explained. We have the speculative movement. Then normally, this does not happen always, of course, but normally the second step is a retracement, and then that retracement can last 2, 3, 4 candles, sometimes more, of course, and then we will see after that the resumption of the fundamental movement in the same direction as the speculative movement. Okay? One thing you can observe more closely when you are in such circumstance of a big news release is when the news is just being released, or a few seconds before it is released and a few seconds after it is released, observe the spread. Observe the spread on the pairs, and you can I will hide all the pairs I'm not interested in, keeping only the pairs for which I have a chart open on my screen. So observe the spread here. Now pay attention, the spread is given in pipettes. So when you see, for example, for the CAD yen that the spread is 38, it's not 38 pips, of course, but 3.8 pips, okay, or 38 pipettes. But you will see that at the moment the news is released, starting a few seconds before and sometimes after, an increase in the size of the spread, and sometimes a very important increase of the spread. It may be 10 pips, 20 pips, 30 pips, 40 pips, depending on how the deviation is important. And so this means that if you have, for example, let's take the pound here. I would take let's take, for example, the pound US dollar, or let's take the pound US dollar. So the news has been negative. So the US dollar strengthening, and you see the price moving upward. And so it may be that the bid, of course, will follow the movement, but the ask is already at a very high level. And so this means that if you make a buy while the price is making that spike, because it is a buy, you will be executed on the ask price, not on the bid price. Remember, MetaTrader always shows the bid price. And so you will be executed at the ask price, so at a very high level. And then, if you have the volatility in both directions, at some point the price reverse, the bid will also follow faster. And so your stop loss, if it is a tight stop loss, may be hit very, very quickly. And this happens when the spreads are widened by the brokers, in fact. This is why trying to trade these spikes is never a good idea. You have almost always, in such circumstances, a bad price execution. Now a retracement does not always happen. It's not frequent. It does not happen, but sometimes it may happen. But so if the retracement does not happen, our rule with the max, at least the max standard, is okay, we don't have a trade. Now with more advanced level of the max, we can still participate in the trade in some special way, but the corresponding trades are riskier, and so the traders must really understand what is happening to take these riskier trades. Oh, Nicole, you see the storm also coming in Paris. Oh, okay. I'm sorry, I'm sending you the storm. I'm sorry for that. Now maybe we will have the retracement. You see on the CAD yen, it begins to appear. On the euro yen, it begins to appear. Also on the pound CAD, a small retracement begins on the pound US dollar, on the euro US dollar, most probably. So let's wait. You can see again that on the US dollar yen, the price has started right on one level. We can never predict, of course, which level the price will respect. But at least when we have these levels, we have to carefully observe what the price is doing around that level, because this can give a hint to what to do, especially if we are in a trade. If we are in a trade and the price seems to respect one level, this is always a good opportunity to bank some result, to bank some profit, and to close one unit. Now, when we are trading with the max standard, whenever we have a long bar, we have specific criteria. We have two criteria in order to define when the situation becomes tradable again. So in terms of depth of the pullback, when we are in the context of a news release, such the non-farm payroll, this is somewhat different. We want just to see some pullback. Yes, Gibson, there is a private chat room for the max graduates. You know what is the address. It is always the same address, okay? So use the same we use for our scrolling parties on the Saturday. Ah, okay, Gibson. Yeah, you need to finish the course first, okay? Yes, Mahmoud, normally you receive the emails for the corresponding level you have accomplished. So yeah, I remember your name. We may have a setup coming in the pound Aussie for a resumption of the downtrend. For the CAD, we have to wait. For the yen, the CAD yen, we have to wait. For the USD yen, we have to wait. For the pound US dollar, now the pullback has started. For the pound yen, we have to wait. For the euro yen, the retracement has started, it seems. And for the euro US dollar, we have still to wait. So we may have some interesting situations developing in the coming minutes. Something you have to be prudent with is the correlation between pairs or even between currencies. Very often you will see the pound following the US dollar, but it is not always the case. And so pay attention, be prudent when you consider trying to confirm your entries or your exit using such type of correlation. So this candle is not set up yet, not yet. This one will be if it closes as a red one, but we want to see it not closing as a long bar. Okay, the retracement has stopped, it seems, in some of these, so we still have to wait. The retracement is not significant enough. And if this candle closes as a setup and closes below this white level, this will be an ideal setup, provided the other conditions are fulfilled. Of course, this will be an ideal setup to consider with the max short trade. Still a high volatility in the market. We see that by the length of the candle. We see that by the length of the wicks, in sometimes in both directions. As I have said, so with the other upper level of the max advanced, the max sum ETF, we have ways to exploit in a more risky way or for more risky trade. This does not mean more risky way because we pay attention very closely to the trade risk management. So trades on the pound US dollar would have been taken in this area, on the pound yen in this area, and so exploiting a movement which is now around 20 pips on the pound yen. But because we are here with the max standard and the max primer, I do not want to insist on these possibilities. So in fact, what is important with the max is to understand the nature of the risk we have under a specific movement. We do not want to catch a movement because the price is moving. We want to catch a movement when the risk associated with that movement is appropriate. And so by experience, we know that when we have such a news release and a big spike, if the price does not retrace, then the trade is way, way riskier. And so it's better to skip it than to take it. Sometimes the trade succeeds, of course, but very often the trade fails. And so it's always better to skip a good movement than to be engaged in many bad movements. This is why I wait with patience the pullback. The pullback will come sooner or later with a high probability. Alexandru asked, after the effect of the news pass, pound US dollar will go after pound yen, or pound yen go after pound US dollar? This is a good question, Alexandru, and this is the question of the correlations between pairs. And the correlation between pairs is not always reliable. In fact, it's always better to analyze the currency strengths, so the strengths of each currency. It's not because after the effect or when the volatility will slow down, we have no guarantee that the two pairs will move in the same direction. Because it depends. If we have, for example, let's consider the following scenario. If we have a weak pound and a weaker US dollar, surely the pound US dollar will go upward. Okay? If we have a weak pound and a weak yen, this will depend on which currency is the weakest. And so it seems that here the pound is weaker than the yen, in which case the pound yen will go downward. And so with the correlation between pairs, you cannot see that, except if you watch several pairs. But even by watching several pairs, you cannot make a definitive decision. So personally, I never ever take into account for my decision, I never take into account the correlation between pairs. The correlation is not constant enough over time. The correlations are highly volatile, whatever the time frame you are using, even in higher time frames. It is said that the euro US dollar and the US dollar Swiss, for example, are very correlated. They are negatively correlated, but very correlated. And sometimes you will see they are moving in the same direction, which is not in agreement with their negative correlation. So I prefer to trade what I see. If the pound US dollar is going upward, knowing that the news on the US dollar has been bad news, I prefer to trade long the pound US dollar, knowing that if the pound is also weak, the movement can be limited. And similarly for the pound yen, but in the opposite direction. Okay? Now, if you use a currency meter, I explain in details in one specific session of the Max Advanced course, I explain in very detail how to use a currency meter in such a circumstance. And the advantage is to always be in the direction of the strength of the currency. The ideal situation being to trade a pair having one currency being strong and gaining strength, and the other currency being weak and gaining weakness, or losing strength, of course. Or eventually, one currency being strong and the other way stronger, or one currency being weak and the other way weaker. In such case, we have good opportunities to trade. By looking at the dynamic of the price here on the euro US dollar, on the pound US dollar, it seems that now and even on other pairs, it seems that now the volatility seems to slow down somewhat. So this means that we have now to wait for an appropriate entry setup. So the pullback is being made in the pound US dollar finally, and in the euro US dollar too. We may possibly see a pullback forming, a long setup forming in the pound US dollar. If this candle closes as a blue candle, and if all the other conditions for a valid setup are fulfilled, we will have a valid setup. But we have to wait for the candle to close before assessing that candle. Similarly for the pound card, now the pullback continues, which is good. Will the price come back in the pound Aussie? You see the price is ranging in all that area. Let me show you that here. The price is ranging in all that area. So there is a fight between the buyers and the sellers trying to take the control of this movement. And so will the sellers succeed to take back the control? Because after all, the trend has been to the downside since the beginning of the day. You see, and the previous day the trend was upward, and so the trend has reversed. When the price has almost reached that price level, and so will they succeed to take back the control? So let's move that yellow box, which was showing, by the way, the area called a balance area, where there is a fight between the buyers and the sellers. And the fight between the buyers and the sellers means that they agree on the price level. They don't agree on the future movement. The sellers believe that the movement will continue downward. The buyers believe that the movement will reverse to the upside. But they agree on that fair value for the moment. But sooner or later there will be an imbalance, and that imbalance will create a movement which may be possibly tradable. So these candles will close in 1.5 minutes approximately. Let's see if we will have a long setup on the pound card. I see nothing else on the other pairs for the moment. the pullback are not finished or not yet started in some of the other pair, like the euro yen, the pound yen, the CAD yen, and the USD yen. And by monitoring several pairs, we increase our odds to get one setup. Pound CAD, difficult to consider we'll have a valid setup here. And we still have long bars. All these bars are long bars, so not a good situation to trade. I don't like this kind of very choppy market. Okay, maybe now we will have with the new, here in the euro US dollar, but it is not a good setup. We have a potential setup, but it is not validated for several reasons we explain in our course. Not everything is aligned properly, and the retracement has not been deep enough. One blue candle here for the US dollar yen is not enough, or the CAD is not enough to define a pullback. So no opportunity for the moment. Maybe the pound Aussie will come back. So because we focus on the risk, if the risk is too high, we simply don't accept that risk. We don't take the risk. And for those of you who trade the max standard, you know that here, in particular with the pound US dollar, you see how these two candles, how the blue candle has closed, how the red candle has opened. And so it happened that here we have a special levels we describe in the max, and the price has just respected that level before bouncing off in order to make the retracement I'm expecting as the second step of the movement after a news release. And similarly for the euro yen at this level, similarly with the pound yen on this level. The pound Aussie is also posing here on such a level, and so it may cross that level or it can bounce off from that level. So, but as long as the price is consolidating, so we'll have no real opportunity. By experience, when you consider possible potential trades after a news release with a big surprise, approximately 3 to 4 times out of 10 times the movement is tradable. This means that 6 or 7 out of 10 times the movement is not tradable. With the approach I have just explained. One minute for the present bar to close. Okay. Okay, the candles have closed, so we have new bar. So let's check quickly. Nothing, 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 nothing. And now we have here what we call a time consolidation. So we have to wait for the next candle. The next candle, if the price comes to the downside, may be a good opportunity to go short. And the price seems to come back in the pound Aussie. So we may have some possibility. Yes, the USD, and for the moment, Mahmoud, the price is respecting that level. I will not say it is a support level, because I do not define them as potential support and resistance level. I don't believe in support and resistance level. I believe in supply and demand level. But if indeed the US dollar is now gaining strength, okay, you mentioned the level 2, the 2 level in the US dollar strength meter. Does this mean, Mahmoud, that you are using the currency meter named AccuStrength? Okay, then this means that indeed when a currency strength has reached such a low level, this means that the US dollar is ready to gain strength. This does not mean it will begin to gain strength immediately. It can take time. Okay. Similarly, when the strength reaches an extreme level of 8, very soon the strength will reverse and decrease. But this does not mean immediately. It can take time. It can take several attempts for the currency to reverse, the currency strength to reverse. So don't jump immediately. So this is why I always wait for a valid setup. I don't have my currency meter running for the moment, so on my PC, because I cannot have all the PC at the same time when I am in a room. I should install an additional monitor for that screen. Okay, a little more than 1 minute for the present bar to close, in which case we may have possibly a setup bar here to go short with the pound Aussie. Provided it doesn't close this as a long bar. Yeah, it takes sometimes times for the strength to develop until the market has completely analyzed the news release and the related news release. For example, with the non-farm payroll, we have the revision, which can also have an impact. We have the unemployment rate, which has also an impact, and so on. And so it's not so obvious to analyze the non-farm payroll. And this is why sometimes a currency meter is very useful to know what are the currencies the big boys are trading, because they don't trade pair, they trade currencies. Okay? Well, my platform seems to be a bit frozen. This sometimes happens. It will come back soon. Okay, we have the bar having closed. You see right on the level. And so let me see here. Yeah, this was a valid entry setup. So here, this candle, I will note it in green, with an entry just below here, normally the support level, this support level. I don't like to call it a support level, and the stop loss would have been, so 1 pip below would have been right here, and the stop loss would be on this level approximately. With our trade max trade monitor, so we can easily do that in one step. We place the stop loss as an horizontal bar, so here we have 34 pips plus the spread 3 pips, so 37 pips. So I can write on my chart ESL 37 pips. With our max trade monitor, we have the stop loss being handled as an horizontal line. We move with the mouse. The max trade monitor or manager also take into account the risk we associate per trade, for example 1% or 2%. And once we get our entry price level, with the one-click button we open the trade, and the size of the trade is automatically calculated by the max trade monitor. Max trade manager. So nothing on the euro yen, pound yen, nothing. CAD yen, nothing for the moment. Nothing on the pound CAD. Nothing on the euro US dollar, and we are still waiting for the pound US dollar and the US dollar yen. You see here, it seems that this balance in the pound Aussie, let me redraw my yellow box here, which represent, I don't need to be absolutely accurate, which represent that fair value, that balance area, seems to be broken. What may happen now is, so the price is making an attempt to break that level, and so we may see possibly the price moving downward and then coming back, revisiting that area, and if the downtrend is still intact, we will see the price bouncing off from that area, perhaps a little higher, it's not impossible, before resuming the down movement. This is the most frequent behavior in such kind of situation. This does not mean this happened 100% of the time, but this is the most frequent behavior. Now, seeing the price on the USD yen posing on this level, this means that most probably we will see the US dollar strengthening and bouncing off from that level. In which case we will have a long setup appearing, but we have to wait with patience for the setup to appear. Not pullback enough in the pound yen, not pullback enough in the euro yen. So we miss, as you can see, we can miss a nice movement. The movement after the big spike here has been a movement of 45 pips. But that's not a problem. If we perceive that such kind of movement is risky, personally I prefer not to take it. I thought we should place stop loss beyond red balance line. Why, Mahmoud? No. Even if you consider this trade as a max primer trade, which was perhaps the case. 1, 2, 3. Yeah, it was. No, it was not a max primer trade. Sorry. It was, yes, sorry, it was one. The Mo line has been broken, so it was a remo, okay? It was a remo, even with the max primer. So we had the let me write remo number 2. So we have the coincidence here between two type of setups. a max primer setup, a REMO, and a max ETF setup. It is a REMO. This means we are not at the beginning of the trend. And so we, as you know, if you remember, we make the distinction for the stop loss placement, we make the distinction between the beginning of a trend and a trend resumption. We are in a trend resumption. Okay? And so placing your stop loss in this area doesn't make sense. Now with the max ETF, the max standard ETF, or the max SAM ETF, the rules to place the stop loss are a little different. But in this case, we have a coincidence between the two entry setups and the stop loss placement. But this is a coincidence. Now, our stop loss is always called an emergency stop loss. The emergency stop loss has the aim, let me quickly check what is happening on the other pair. Yeah, okay. The aim of the emergency stop loss is to, once the trade has been opened, is to protect the account in the case we have, for example, a technological problem with, let's take an example of the internet connection going down, and we become blind for the trade. And we don't even have the possibility to call our broker to know what is happening and possibly close the trade. And so if we take a risk, let's say of 1% on this trade, if the price hits that initial stop loss, the loss is only 1%. But if we don't have a technological problem and we are able to handle the trade manually, we will never, ever let the price hit our emergency stop loss. This is why it is called an emergency stop loss. In fact, for the moment, the worst place for, or the worst location to close the trade is what we call the movement invalidation area, which is a specific area here in this zone. Okay? So the trade can be closed anywhere in this area, depending on our exit criteria. And you can see that in this case, the loss, the maximum loss, will be only half of the loss made on the emergency stop loss. And so with our trade risk management, the max places us already in a comfortable situation, because we make the distinction between the effective usual stop loss and an emergency stop loss, and because the maximum risk is taken on the emergency stop loss. But again, this place is the worst place to close the trade. If the price moves downward, or if at some point the price begin to range, or even make some pullback, then we will see that area going downward. And if it moves downward enough, we will have our trade in a risk-free situation, in a risk-free situation. So we will see. We will illustrate that. And you can see that with the new candle coming, this area has already moved a little bit lower. Okay, so reducing the effective risk we have on the trade. And now, considering the time we have now inside the day, we are progressively approaching the Frankfurt close, and 1 hour later, the London close. In the context of the non-farm payroll, with the max standard, I always advise our max trader not to force the trade and not to make scale-ins. Just make one entry and possibly one MX and one XXX, or immediately one XXX, closing the two units at the same time. But we still have enough time. We have here approximately 1 hour and a half before the Frankfurt close. But taking a scale-in becomes now riskier. Well, let's have a look on the other pairs quickly. So nothing for the moment on the euro US dollar, nothing on the pound US dollar. maybe on the euro yen here, but this pullback has not been deep enough. And you can see here, Mahmoud, the US dollar is late to strengthen. It continues to weaken, in fact, or to stay weak. And so let's focus on the pound Aussie now. Later during the day, of course, the odds for a positive trade become smaller and smaller. And so I'm not very tempted to take a second trade. And so in such a case, I will stick with the only trade I have for the moment. Yeah, and 110 and 50 is in this area. Okay, so we are not too far from that level. And so with our max standard template, yes, we have that level in the area you are considering, Mahmoud, with an accuracy of around 10 pips. Okay. So let me show you in detail how we will handle this trade on the pound Aussie. So I will no longer follow the other pairs. Okay, in real time I would, of course, but I will be very cautious to take a second trade. But because I need to give also explanation, so let me focus on the pound Aussie alone. So once the trade has been opened, so we look for all the potential exit techniques we have. We have around 20 exit techniques with the max standard, advanced, or the other level of the max. And so among these exit techniques, we have exit techniques with the help of indicators. For example, here I have illustrated one. The stochastic of the RSI is one of our preferred indicator. We don't attach any predictive power to the indicator. They are simply there as tools to help us pinpoint very quickly when we may have, or to quantify when we may have a potential risk for the trade. And this is in fact the definition of our exit techniques. Any exit techniques we have is a way to quantify when the risk is appearing and when the risk becomes important enough to consider reducing that risk. And so an example of a typical exit technique is the divergence here on the between the price and the stochastic of the RSI. We have lower lows in the price, we are in a downtrend, so lower lows in the price and higher lows in the RSI. So this means that blue candle is our exit setup, and we have effectively executed the exit here, an MX. Previously, this blue candle was also an exit technique given by the RSI, but this exit technique has not given an exit execution. This illustrates that it is not because we have an exit technique triggering that we have necessarily an exit execution. And so among the exit techniques, so we have exit techniques with the help of indicators, we have exit techniques with the pure price action. A long bar is always, when we catch a long bar inside a trade is, and in favor of the trade, is always an exit technique. We have also exit techniques made with a combination of price action and one specific indicator, just to show us when we have a loss in momentum, a loss in volatility. So it's a specific combination between the price itself, the pattern the price is exhibiting, and the Bollinger Band, the yellow Bollinger Band. We have also exit techniques made on the timing aspect. And we have the final exit technique, which is made with the movement invalidation. So if the price comes in this area, respecting some specific criteria, we have what we call the movement invalidation. And you can see that here progressively, with each additional candle, this area is moving downward, making the risk on the trade smaller and smaller. So we have a lot of exit technique helping us to try being as accurate as possible in our exit criteria or exit level. Mahmoud, it's difficult to understand, to always understand what the big boys are doing, because we don't know how they have finally interpreted the news release. I remember that the deviation of the non-farm payroll has been a negative surprise, but with an improvement. Even if it is a small improvement, it is still an improvement in the unemployment rate, but a bad trade balance. So what does this mean? In conclusion, what are the decisions the big boys have taken? Difficult to observe. What I'm seeing is, for the moment, the US dollar is still weakening. We can see that in the USD yen. The US dollar is not strengthening in the euro, in the pound US dollar, and it's not strengthening in the euro US dollar. So globally, for me, it's still weak. So in the US dollar yen, so a setup was given in this area, but for me, as I have said, I consider this trade as risky, and I see no other opportunity. It's a pity that no opportunity has happened in the euro yen and the pound yen, but this happens. Okay. Maybe one will appear in the CAD yen at the close of this red candle, but let's focus on the pound Aussie. So we are now facing the Wall Street Open in a few seconds, and very often, not always, but very often, the Wall Street Open is an opportunity for a price reversal, not a trend reversal, but a movement in the opposite direction of the underlying movement. So let's see if this will happen again. So now let me check this candle here. Let me make a zoom in on this candle, because if we have a long bar, this will be an exit setup bar. So we have 13.99. No, it is not a long bar. No, it's not a long bar. So we don't have a long bar here. To have a long bar, the long bar must have a length from the high to the low, or the low to the high, which is 2 times or more than the average length of the candles of the previous movement. Let me check something here, because we may have an interesting situation. The store RSI is at 2.4 here and at 2. Okay, no, we don't have a specific type of convergence, of divergence. I don't see that on my chart, Dan. On my chart, I see we are still far enough from the situation you are describing. It should be around this level approximately. Let me show you. So around 73.40. The level you are considering for me is around this level here. So we are still too far away. Okay? where is the next level, or the next level is far enough, so no problem for that. And you see this area, we call the movement invalidation area, is progressively going downward. Okay, have a good night, Jono. Ah, you were looking at the pound yen. On the pound yen, yes, you are right, indeed. For the pound Aussie, what you are mentioning is located somewhere, let me tell you, no, a little higher. So somewhere in this area. Okay, so we are not too far. We are not too far. But this is not an exit setup for the moment. Okay? Sean, I will let Craig answer. Okay? Not all. Not all. For the max graduates, yes, they know. Okay? Of course. Let me resume my chart. I prefer to see my chart pane to see the chart that way. In the GoToWebinar room, the level I have drawn, levels we have with the max standard reaches such kind of levels. We have an exit rule. I'm going to prepare a vertical line for an exit setup because we may have possibly an exit setup triggering here with this candle, which will close in 3 minutes. Yeah, I would never forget that all these levels are potential levels the price can reach. You will never have a certainty the price will reach that level. Okay, never. This is why I completely disagree with traders making all the long arguments between what they call lagging indicators, leading indicators. Of course, if we use technical indicators, they are lagging. That's true. But with the max, that is not a problem because we don't trade them. We use them to pinpoint quickly some interesting potential situations, but only what the price is doing tell us what is the decision we have to take. When you draw on a chart a support or resistance level, a supply or demand level, whatever you call it, many traders will call them leading indicator. You have no better priority to see the price reaching them. It's not because the price has reached such a level in the past that you will have the certainty the price will again reach that level. It would be better could we know the liquidities we have in reality on these levels, which is easier to analyze in some market like the stock market or the futures market, but not necessarily in the forex market. And even if you know in details the different levels of liquidity in the market, you still have no guarantee that the price will reach such a level. because you don't know what are the real objectives of the big boys driving the market. Don't forget, the big boys are the traders in the big banks, and these banks may sometimes work together, sometimes they form groups, and these groups may have different objectives, and these objectives may be antagonist objectives, okay? And you never know in reality, in details, who is the leading group. Okay, you see here now the price is reaching this level. Okay, we may have the rejection of that level. Let's see. In which case I will make an MX in this area. Let me draw the level where I will make an MX if the price right here, okay? In the meantime, of course, when the trade moves, you see that the invalidation area is moving downward. Now the entry price level begins to be in that area, but of course, in the meantime, what I can do and what we must do is to adjust our emergency stop loss. And I would even adjust my emergency stop loss that way in order to reduce the worst case risk on the trade. The practical risk now is almost zero. We are now in almost our entry level inside the movement invalidation area. So the trade begins to be very comfortable. No exit yet. So the price has not followed through enough to reach that level and make my MX. So as long as it doesn't reach that level, I stay with my 2 units. Okay? Sean, this is a good question. The course is always given at 4 p.m. Eastern time, okay? And all the training sessions are recorded and the video are available. Okay? And so you can follow the course through the video. And of course, you will have to participate to the homework. Your homework will be graded. You can answer questions, of course. Yes, Rodolfo, you know, in any situation the price is, you need to know what the price can do and what your decision would be. Now, for example, with the pound Aussie, the next level is around here, let me see, 133.20. 133.20, yes. So I will 133.20, let me check, a little above. Okay, that level. This can be the next rejection potential level. And so we have to know what to do. The rejection of this level is not yet accomplished. We may still have the rejection. We don't have a true breakout for the moment. And so what may happen? The price can retrace, hit my level here. I will make my MX, in which case I will be in a risk-free trade, of course. Or the price will not follow through, will continue downward, and will possibly achieve that level. If the price reaches that level and rejects that level, we will have another potential other level, MX level, okay? So in every situation, we need to know what to do. Okay, here I push on the button to make an MX, okay, because the price has reached my MX level. So with the max trade monitor, I will close 1 unit here. And so I call it MX1. And you're knowing exactly what may happen and what is the decision you have to take in the case this happens, normally you should feel easier in your trade. And so this unit would be closed, in fact, with a profit of how much? You see here, let's say 24 pips minus the spread 3 pips, so 21 pips, so plus 21 pips. Plus 21, okay? Now, knowing that in the worst case scenario, my second unit would be closed, let's say at the upper level of this box here, the loss on the second unit would be, as you can see, 10 pips plus the spread, 13 pips. 13 pips is even less now, because this area continues to go down. So now we are in a risk-free trade. There is no possibility for the trade to be a losing trade now, okay? And so was the risk real here? No, because the pullback has been a small one. But at the moment the pullback has appeared, the risk was too much important. We can never know for sure the risk will be real or not, but we have ways with the max to quantify when the risk becomes important enough to reduce the risk. And reducing the risk is made in two ways: closing one unit and then, of course, tightening our stop loss. And when we close one unit, which reduces the risk of the position, the closed unit can make a profit or not. Here it has made a profit, and this profit is large enough to balance the remaining risk we have on the second unit. Okay? And now we wait simply for the next exit technique. And you can see that for each new candle closing, this area is moving downward. And so now it contains the entry price level. And when it will be deep enough, in order to contain also the spread of the entry, the second unit will be at least break even. And if the price makes us the favor, if I can say that way, to continue going downward, this area will continue to go downward too, making our second unit also surely profitable. And you can see that the setup has been right on the right place under this level. I have explained that this level was a balanced area, a fight between the buyers and the sellers for who to take the control of the movement, and it seems that here for the moment the sellers have the control on this. No, Rodolfo, considering with the non-farm payroll and considering how late we are already in the trade, you see we are approaching the Frankfurt close. I don't add risk to the trade with the scale-ins. Is it a TCZ? If I draw my Bollinger Bands as a straight line, let me show you that. I cannot catch. Where is it? Here. The gold line as straight lines. That way we will see them better on the chart. In this area, yes, indeed, we were in a tight concession zone area. But when we get the breakout, in fact, this candle was also making the breakout of that support level. And you can see the Bollinger Bands now are expanding, showing that we are in a trending mode. Now, in less than 1 minute, in 45 seconds approximately, this candle will close most probably as a setup bar given with the RSI indicator. But because we have already made our MX in that what we call in the course the time window for that bottom formation, this is a setup we will ignore. We don't make two MX to exit in the same area. Okay? And why is making scaling in the context of the non-farm payroll late during the day? Simply, if you look at the chart on a more global perspective, let me make a zoom in here. Okay, the Tokyo Open was approximately here in this area on this candle. So this stop has been made a few bars after the Tokyo Open. And if we consider the entire movement, we are in what I call a true trend. And now the price is making a steep angle. So the trend is making a steep angle. We know that when we are in the context of a true trend, we can predict with 75% probability when such a trend will exhaust. And today, in this case, this will happen in this area. Okay, in this area, approximately. Let me draw it exactly. So first of all, I draw it in red because our Max graduate like to call it the red magic box. So in this area today, okay, but because the price is making a steep angle, the probability are higher for this movement to exhaust before that area. Now it is never a certainty, it's simply a probability, okay? Now the risk on that trade, if I am forced to close the trade at the top level of this yellow box, I will lose only 8 pips on the second unit. So progressively, this second unit of the trade is progressively approaching the break-even level. So this is an example of a time exit technique. So we know, depending on the circumstance, when a trend, specific type of trend has a high probability to exhaust, and when it has a higher probability to exhaust before, not always, but especially when the price has made a very steep angle like this movement now, the non-farm payroll has participated to that, of course. So usually the trend exhausts before that time period. And now, of course, in the rest of the cases, so less than 25%, around 12.5%, the trend can continue to go downward, so the trend can possibly resume to the downward, but the odds are way more in favor for an exhaustion of the movement. Not necessarily a trend reversal, okay? Because indeed, the opposite of a down movement is not an up movement. It may be an up movement or a consolidation area. And by the way, this is the reason why if you take a trading system, which is a losing trading system, and if you buy instead of selling, and if you sell instead of buying, you don't have the guarantee to have a winning system. Because many traders in that context forget that the opposite of a down movement is not always an up movement. It may be also a ranging movement and vice versa. So this candle probably will be an exit setup with the RSI, but we are still in the same bottom formation here. So this is an exit setup I will ignore. Now for the traders with the max who are a bit Freddy cat, because we know that this true trend most probably will exhaust before reaching this red magic box, a wise decision would be to close the trade now, okay? But because I am in a risk-free trade, I prefer to stay in the trade and see what the price will do. Will the price resume the down movement or not? I know that in my worst case scenario now, I'm almost break even with my second unit, and I may still have an important exit technique before the price reaches this movement invalidation. We still have one possibility to close the trade before the price reaches the movement invalidation, which is a specific exit technique our max graduates, or some of them in the past, have named the Tiger Pounds exit setup, which has an 85 to 90% success rate in terms of exit technique. Now, of course, what I have illustrated to you today is the 5-minute time frame. Okay, but of course, this works also in any other time frame, the 15-minute time frame, the 30-minute time frame, the 1-hour time frame. The 1-hour time frame, if you can be a full-time trader, is a nice time frame to trade too. And then higher time frame like the 4-hour, the daily, or even the 8-hour time frame, the 12-hour time frame, they are nice higher time frames to trade. Personally, I also like to trade with a daily time frame, so I have independent trades. The daily time frames for me has the advantage I don't need to stay focused on my screen for these trades, and these trades follow more closely the long-term fundamentals. And so this is why I like to have both type of trades. Small time frames trade with the 5-minute time frame corresponding to the short-term events, like the non-farm payroll, and long-term fundamental trades with the daily time frame. And so each trader, of course, must choose very carefully the time frame to trade. I understand, of course, that not all the traders can be full-time traders. Many have another activity, a professional activity, so they are part-time trader, and in such a case, they have to carefully choose the time frame to trade. And I always advise them to choose a higher time frame. Don't try to scalp the market. Scalping the market for me is not the best way to trade. As retail traders, we are not well armed to scalp the market. We are always late in the market, in fact, by the way, to scalp the market. And the trade risk management is more complex with scalping than with trend trading. So I advise part-time traders who have another professional activity to choose a higher time frame. What is the best time frame? It's up to each trader to define, because the time constraints of each trader is not necessarily the same constraints than another trader. And so for one, perhaps the 4-hour time frame will be excellent. For another, it may be the 12-hour or the daily time frame. And so each trader has to test these different higher time frames to finally choose the one which best fits the time, his or her time constraint. Let's see if the price will come back. Now, when the movement is invalidated, this means that when the price comes in this area, most of the time the exit is made in the lower half portion of that yellow box, but not always, but most of the time. And so you can see that in that context, we are already break even with the second unit. But anyway, even in the worst case scenario, so the second unit is having a very small risk, 7 pips. And in the meantime, of course, the stop loss can be adjusted also, because we never know if at some point we have an internet connection problem. So we can always guarantee the trade, protect the trade in this case, taking profit of that nice MX. minor exit or momentum exit and the stop loss adjustments are major aspect of our trade risk management. Of course, they are not the only elements. There are other elements. For example, the news release and the context of the news release are also very important. The timing during the day is also very important. The number of trades we consider to handle simultaneously is also another important aspect of the trade risk management. And you see with each candle, this area continue to go a bit downward. And in fact, you can see that even a lagging indicator can have some advantage. By definition, a moving average, whatever the type of that moving average, simple, exponential, weighted moving average, and so on, because it takes into account a certain number of bars, which correspond to the period parameter of the moving average, has so some inertia, some resilience. And so this means that even when the price makes some pullback, like here you see this is a small pullback, this was a small pullback, this was a pullback. Even with many pullbacks, the EMAs, so the moving average, in fact, still points, in this case, downward, which is the illustration of the inertia they have, in which case it is an advantage. Because even while the price is retracing, our movement in validation area continue to move in our favor. And so what seems to be a disadvantage for many, many traders may be a tremendous advantage when used properly in the context of the trade risk management. And so for me, it's a false argument, that argument between lagging and leading indicators. Never is granted for sure in trading, so you need to use, I don't like to say a clever tactic to handle your trade, but you need to be conscious of what the risks are in your trade and how you can perceive when the risk becomes too important. And this is key. We never attach any predictive power to any tools we can use on the chart, but we can use them to quantify when a risk becomes important enough to consider taking the decision to reduce that risk. And this is a complete change in the paradigm of a trading process. Understanding also the market conditions. Is the market in a trending mode, in a counter trend mode? Now it is in a trend mode. Is it in a choppy mode, for example, is also very important in the way to adapt the way to handle the trade. And a price mode can change within one candle. So now the price is in a trending mode, but it can go into consolidation mode within 1 or 2 bars, which is fast. And so we teach all these elements, in fact, in our different courses, with more and more advanced concept in the upper level of the max. Now, one thing is for sure here, now we are no longer in the same time window as the time window of our MX. We will surely make another bottom here. And so the next exit technique triggering will be our moment to close the trade. Fortunately, the storm has calmed. I hope it's the same for you, Nicole, in Paris. It was raining cats and dogs for 30-45 minutes. Same thing here, but earlier. I have had an alert with my power supply. I had a micro interruption, but fortunately, all my material is connected on an UPS, which has for the moment 39 minutes of autonomy, so I am very, very comfortable. And of course, in the meantime, when the price moves in your favor, we have rules, of course, to adjust our stop loss, our emergency stop loss this way. And now we are, in the very worst case, we are almost break even with our second unit. And you can see that the movement in valuation area is still going downwards. Okay? Yeah, a UPS is a lifesaver for a trader, as you said, Nicole. It's a must to have. I have my PC, I have my laptop, I have 3 screens for the moment, I have an external drive, my modem, my phone, my printer, all connected to that UPS, and so I have 39 minutes of autonomy, which is plenty of time to close my trade and to shut down my material if necessary. Yeah, everything is on UPS for you too. That's a good point. Unfortunately, today UPS doesn't cost a lot. I have paid mine 100 euros. 100 euros. And it's the second battery. I have had to change the battery a few months ago. I have paid 25 euros for the battery. So it's a must. It's a good investment. Okay, I hope we will see the close of this trade. Otherwise, you already know the different scenarios we have. I can, of course, extend here this level that way. And we may have, now if we have another rejection of this level, we will have our exit technique. Why? Because this time window is different from that one. Because this is forming a new bottom compared to the previous one. So an exit technique appearing here will be a valid one. Ah, you have 2 UP. Oh, that's nice. Yeah, it depends on your configuration, your specific configuration, of course. Okay, look here. It may happen that the price will reject that level. So let me define where I would make my exit if this is the case. Oh, it's easy. It will be around this level here. So at this level, if the price follows through, I will make my x66 a little lower here. So on this level. If the price does not follow through, I don't close my unit here and I keep it for the next occurrence of an exit technique. And we can see that if this candle closes as a blue candle, we will have also another divergence in the story RSI. But we will close, okay, now the trade is closed or considered as closed. So we have an x66. So closing the second units here. And so with a profit of, let's say 29, let's consider a small slippage. So 29 minus the spread 3, so 26 pips plus 26. And so, should this trade made with a real account, we would have, so trade number 2. So plus, we have 21 here and 26 here, so 47 pips. This is the total number of pips made by the 2 units, but we have to average that number to have the average result of the trade. The ESL emergency stop loss was 37 pips. And so the rework to risk ratio is, I have to calculate, plus 0. So we divide 47 by 2 and then by the stop loss size. So 47 divided by 34, this will give 0.64. 0.64 R. R being the Von Tarp notation and representing the risk taken on the trade. Okay? And so, for example, if the risk on the trade is 2%, this means that that trade has grown the account by 1.28%. If the risk is only 1% of the trading account, this means a profit or increasing the account by 0.64%, two-thirds of 1%. Okay? And then if you combine the two trades, you have more than, you have almost 1.5 R profit, so almost 3% profit with a 2% risk, or 1.5% with a 1% risk. So we have to wait with patience for the appropriate conditions. We don't try to catch a movement because the price is moving. We have to appreciate the risk associated with the movement, and in the risk appreciation we have always to consider the global context, and in this case the global context was mainly made with the non-farm payroll release and all the related news associated with the non-farm payroll. And when we have the appropriate behavior of the price, then we have a trade. And you can see here the price after I have made my XCC resume the down movement, but I don't care. I have made my trade. I know that now we are in the time period when this movement has a very high probability to be exhausted. It may be now, it may be a few minutes later, but anyway, I have made my trade. I have made my day. I'm happy with. Okay, so I thank you again for your participation. I like when there is some interaction and when there is some movement in the market. And so see you on the other side for our other max activities. And when we will have another open session, of course, you will be informed and you are warmly invited to participate. On that, thanks again, have a great weekend, and in the meantime, take care. Bye everyone.